Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is Friday, September 6, 2013. We've had a fairly good week and some good volatility here. So we will get to all the technicals here in a minute. Let's go quickly through some of the fundamental reports out today. Out of Japan this morning, the Bank of Japan released its monthly report, and it does a quick overview of the Japanese economy, which showed pretty much modest recovering, as they put it in their report. So that was a little bit of a positive for the yen. And then, well, some other news came out that we'll talk about here in a minute that also gave a boost to the yen. So in the UK, industrial production and manufacturing production, both disappointments. The manufacturing production up only 0.2%. They were expecting up 0.3, and last month was up 2 full percentage points. Also, industrial production unchanged. Expectations were for an increase of 0.2%. And that's coming off of a 1.3% increase from last month. So really disappointing numbers there. Really hoping to see somewhat of a continuation to last month's very, very strong numbers. In Canada, unemployment change, 59.2 thousand. Very, very good number. Much better than the 21.2 thousand expected, and certainly a lot better than last month's negative 39.4 thousand. So unemployment rate also dropped to 7.1%. That is a very good report there out of Canada. So the Canadian dollar really rallying off of that news. Then on the flip side, in the U.S., employment number, non-farm payrolls, 169,000, which was close to expectations. Everyone was expecting around between 175 and 180. So weren't that far off. However, last month's July's revision came out at 104,000. That's down quite a bit, and that's a real disappointment. So that really hurt the dollar, and consequently anything against the dollar then rallied quite a bit. Unemployment rate, though, actually dropped to 7.3%. So that is encouraging for the tapering news. And anyone that's looking at the tapering as being the issue. So at the end of September will be the next Fed meeting that will either put to rest the speculation that they're going to start tapering here in September, or that they're not. So we will know that in a few weeks. Next week, kind of a quiet week for economic data. However, a lot of stuff out of the Asian countries, starting on Sunday evening New York time, or Monday morning Japan's time. Current account and final GDP. Final GDP is actually expected to show a 1.0% number, and that'll be up from 0.6% originally reported. So that could be a real boost to the yen again. We'll have to see, though, if it comes out below that 1% expectation, that could seriously curtail the yen's rally also. Then out of China, CPI and PPI. Again, the PPI expected to be negative, however not as negative as last month, so that could be a positive. Also, trade balance out of China, expectations for 20.3 billion on the positive side. So that's encouraging as well, because that's a little bit better than last month's numbers, and certainly not negative as we saw a few months ago. Then on Tuesday, we have industrial production and retail sales out of China. Both of those are expected to be fairly close to last month's numbers, and still retail sales up around 13%. And industrial production up around 10%. So if it comes out very much different than that, that could hurt things like the Australian dollar and things that are very well connected to China. On Wednesday, labor report out of the UK, claimant count change expected to be down 21.2 thousand, and unemployment rate expected to be stable at 7.8%. On Thursday, out of Europe, industrial production expecting to be a negative 0.1%. We'll see how that actually comes in. Last month was a positive 0.7%. And in the U.S., weekly unemployment claims being watched very closely as we're now starting to get into the holiday season coming up, and there'd be more hiring and less layoffs there, so this number will hopefully decline a little more. Expectations are for 332,000 this week so far. And then on Friday in the U.S., retail sales expected to show a decent increase of 0.5%, 0.3% on the core rate, and then the PPI also coming out. Expectations are for 0.2%, both on the core rate and the full rate. And finally then, at 9:55 New York time, the preliminary University of Michigan consumer sentiment number, which has been hovering above 80 for the last few months, which is a good sign. It is expected to come in at 82.6, so we'll see how that actually comes out, but that would still be good as long as it isn't below 80. If it goes below 80, that would be a disappointment, and the dollar then would get hit for that. All right, on to the technicals here. Euro US dollar up 45 points today. Really not much of an issue here because we've really sold off quite a bit in the last week and a half, 2 weeks. And this is nothing more than what could be a bounce after yesterday's slide off to new lows. So we bounce up today, maybe Monday a little bit, and then sell off again. Looks like we're probably going to head back down to this 127, 128 area. And if we pop out here to the weeklies, we can see that a little more. Really not looking too good. See how next week shapes up, but it could very well slide off here again and head down towards that lower end of the range. On the monthlies, well, we're starting to fall off here on the monthlies as well. Last month was negative, and now this month so far for the first week is also negative. Really, we're kind of range bound here, but with a downward bias. So any news, negative news, could really cause the euro to sell off a little more. Pound dollar up a little bit today, up 37 pips. We were up quite a bit earlier and has since fallen back. Really looking like we're starting to build a top in here. We made the highs here a couple weeks ago, and now we're testing those highs, and we're doing it with not a whole lot of conviction here. So if this holds and we start going down next week, we take out these lows down here, close below that, that would be negative. That would send us down then to the 150 level. On the weeklies, we can see this a little better. This week is now positive, but we have 2 weeks ago that was that nice tail up there turning the market around. So if we do not go up and close above those highs next week, it will be negative, and we will start selling off again. And same on the monthlies here. We're on the high end of the range for the last 6 months. So really looks like the only way we can go is down from here. US dollar against the Swiss franc down today 62 pips. We were down about 100 earlier, erasing pretty much all of yesterday's 100-point gain, and we've since recovered a little bit. So the Swiss still looking kind of weak there longer term, and really looking like this could be a continued rally for the dollar. On the weeklies, we can see this week shaping up pretty good. We kind of jumped ahead on the beginning of the weekend, but a little bit of a gap in there, and then finishing out the week off of our highs. Not a great sign, but not bad either, depending on how we trade next week. So looking like we've gotten the turnaround here. Put in a pretty good base here. Nice bottom building. So on the monthlies now, we're right on that first trend line, which goes back to the year 2000. And we need to get above this one, which is currently at around 101, 100 area, and we would need then to close decisively above that to turn around the multi-decade downtrend. So about 102, 103, and that would then push us up a little bit higher. So US dollar against Japanese yen down 91 as all the news came out. We were down about 120, 130 a little bit earlier in the session when that non-farm payroll revision came out. We've since recovered real nicely, so really looking more like we're having a correction. We kind of bottomed out down here, consolidated for a while, moved up here pretty much along this trend line. We did actually close above it yesterday for the first time, but now we're right back down below it, so all bets are off if we're running to new highs. But it really looks like now we could probably turn around from this level and move up again. So we may consolidate here for maybe another week or so with a downward bias, and then start to move back up. On the weeklies, we can see we were well above this this angle line here, this triangle line, for most of this week, and have since gone back and closed below it. So another negative sign, but not too negative. We could still bounce around in this area as we come to that point, at which stage then we probably break out to the upside. Now monthly so far, we only have 6 days into the month, so it's really not a good judge, but we are looking positive for this month. We're riding up on that trend line, and how we close the month out is really important. It'd be great if we could close the month out around 103, 104. That would then really give a good momentum build for October, where we could really rally up to around the 108, 109 area. So still looking for this market to move higher. Again, nothing has really changed to give us an indication technically that we're going to turn around on the longer term. Short term, in the next week or so, we could see some more downward pressure, but longer term still up. Euro Swiss off today, off 34 pips. Very nice day yesterday. We erased all of yesterday's gains plus the last couple of days here, and then rallied back towards the middle of the session here. So once that news came out, we sold off, and now we've recovered. So that's not exactly a bad sign. We're really starting to build a good base here, just very much like the dollar Swiss. So we got a good double low in here. We need to close well above this area here. About the 125 level would be really good. If we can close up there, that would be very positive and take us up to some new highs. On the weeklies, we can see the weekly range is smaller and smaller. We're now starting to break up a little bit, and maybe get some momentum building here to once again try to embark on some new highs. So longer term still looks very good. Euro yen down today about 70 pips right now, just hovering around that 130.50, 130.75 mark. We did hit up above 132 a couple of days ago, and have since fallen back. We're getting smaller and smaller. We're building more and more of this kind of an ascending triangle here, kind of elongated, but still building it. That would mean that we'll push higher here as time goes on. If we look at the weeklies, we can see this a little bit better. We can draw this in here a little bit and see how that would work. As we come to that point, we should start to move up here, get around to that 137, 138 to complete the pattern on the monthly, so we can see it here building even a little more. Even if we do it intra-month, in other words, during a particular month, we get up to that 137, 138 and then back off, that would be a completion. And that would then signal that we could turn around and go south here a little bit, get down to around the 125, maybe even down to the 120 level, and build a base down in there for a few months before we again move up. So this this upward move that we've had for the last 6-8 months here is really doesn't look like it's over with just yet, because we haven't completed that pattern up around the 137 mark. So looking for that to happen probably in the next month or two, the way it's starting to shape up. US dollar against Canadian taking a big whack today, down to 104, just above the 104 mark right now, and really looking like we'll probably head down to this trend line area, down around the 103.50 area. Maybe a little more of a sell-off here on the Monday-Tuesday session, and then probably a little bit of base building, and then another move up. Longer term, if we look out here on this weekly chart, you can see we're really building this momentum up very, very well. It's doing a great job, and even on the monthlies, really looking very good. We got this nice curvature going here. Each time we go up, we come down. It's a higher low, and that is a good momentum building type of situation here technically. So at some point we're going to close above this level right up in here. which is around the 105, 106 area. So we close much above that. That is extremely positive, and we could probably run up very quickly to around the 109, 110, and quite even possibly to the 115 area very quickly. So really looking good longer term there. US dollar and the Australian neck locked here for the last few weeks. Up today about 73 pips, just around the 92 mark. And we've been up there before, about 2 weeks, 3 weeks ago, fell off, tested these lows. Now we're moving back up, so it is looking like we're starting to base out in here, and we could be basing for a little while. The fear is, though, that we'll probably base out, move up here, get up into this area around the 95, 96, 97 level, build another short-term top in there, and then sell off to some new lows. Now we can see that here on the monthlies. Depending on how we close out this month will really determine how we continue. Now last month we were also up at these levels and then sold off towards the end of the month, and the fear is that we could do that again this month. So not a whole lot of confidence in any type of rally here. If we do get a rally, it's probably only a selling opportunity for the longer term, getting down into that, still to complete the pattern around that lower 80 mark. That is it for today. Questions or comments, I am available at www.fxaddicts.com. Also, you can shoot me an email, tim@fxaddicts.com. I will be more than happy to help you out with any questions you have about currency trading. And also, if you are so inclined to learn more and get more in-depth knowledge, we do offer classes. They're starting up again at the end of September, so feel free to check those out as well. We do have some very good offerings coming up. That is it for this week. Have a good trading week and a good weekend. Thank you.